And with that, we'll kick it over to you, Joe. I passed out your presentation and your recommendation sheet, so everybody should have it.
Okay. All right, so I'm just going to use that presentation sheet just to hit the highlights and then be happy to answer any questions anyone has. So to give two reports, the regular financials and then the state single audit report. We'll talk about the federal a little bit. So starting on page 8 of the hard copy is the opinion on financial statements, unmodified, clean opinion, which is the type of opinion that you're looking to make sure that you get. The MD&A starts on page 11, goes to page 22. This is a good executive summary of the operations of the town for the fiscal year. Talks about many different things, the budgetary highlights, any budget changes, significant budget transfers, additional appropriations. It talks about each year major funds that are upfront in the financial statements on C&D, as well as your enterprise funds, any significant capital asset activity, then any long-term debt issuances, or just what the status or change in your debt is. The general fund starts on page 26 on a GAAP basis. Your assigned fund balance is 18.3 million. That's on Exhibit C on page 26. Your net change in fund balance for the year was $922,000. So you added almost $1 million to prior year fund balance. And to see what the big components of where that 922 came from, it's on page 86 is your revenues and expenditures. So it's kind of your budgetary statement. So revenues were under budget by $1,672,540, and that's considering the appropriation of fund balance of the 2.6 million. So on a cash basis, in the sense you did exceed what your budget because you plan to use some of the fund balance the budget, and expenditures were under budget by the almost $2.6 million. So that generates your positive operations of the 922,000. Water and sewer fund, you had an increase in that position of 845,000, of which the 354,000 of that was increase from charges of services. So that was something we saw pretty consistently due to COVID and people working from home, that most water and sewer funds actually had increases in revenues. The internal service fund did very well. The increase in that position of the 1,340,339. Prior year, you also had a good increase of the 835,000. So we're in some cases we're expecting that. Last year you did well because of COVID, and you'd see it kind of go the other way in 2021, but that didn't happen in your case, so which was good. Footnotes start on page 38. Just to point out two of the notes. The coronavirus contingency note was different because a lot of the things we didn't know last year didn't really occur. So we did just add a disclosure on the types of funding that you have for related to coronavirus, the ESSER money, Coronavirus Act money, and the ARPA money. There was a prior period adjustment related to implementation of GASB 4, which has to do with fiduciary funds. Actually, that was a reclassification of student activity funds to special revenue, and then you had the additional reclassification of the fund to capital projects. Again, the federal single audit, which we will, I think what we're working on now, it wasn't completed because we're waiting for information on ARPA, which the federal regulations, the final regulations finally came out last Thursday. So unfortunately, we already issued the report, but one of the more interesting parts of the final regulations is that everybody gets an exemption of the first 10 million they could apply to revenue loss, no calculation needed. But unfortunately, we did a calculation and, but you can recognize the balance next year because it is by payment. So you have to do it by payment, but you clearly would have been okay. But again, that just came out on Thursday. State single audit, for that report, we did issue, we had no findings for question costs on any of the programs that we tested. I think we did send out the communication charge for governance, which then talks about that we do audit estimates and the disclosures are clear or neutral, and we are independent of the town. And then next year, the one we've been waiting for was postponed a year, GASB 87 comes into play for leases, which just changes the lease accounting to be as more like capital lease accounting versus what it was in the past. So we've been operating, if you rent space, if you rent a parking lot, and all that would have to be capitalized and as a right to use for the asset, liability for what you have to pay for that right to use. So that's effective technically, you know, on July 1, 2021. The recommendations, again, some of these have been there before the golf course and the capital assets. Definitely get a little better, but still could use kind of a more cohesive system there. The water sewer billings, again, that's no change from the prior year. And then a few things with the education side, ledger and the tuition, which I think you talked about that you're looking at doing differently for this coming budget. And then the purchasing accounts payable, there was no change. We did recommend the town look at the policy on advanced collections and revise that as the best practice. We have a lot of clients have a considerable amount of money that comes in June. So and once your bills are printed, the system does, quality data does all the work. And then the last section, there were 4 recommendations that were removed. I think all those were on the education side. So there was a few things that got cleaned up as far as approval of new vendors and recording accounts payable, formalizing journal entries, and the capital asset record keeping, or the software was able to print the reports that we did. So that's my very high level summary. Be happy to answer any questions anyone has.
Joe, I have one, and maybe it's more for Ashley or Kevin or whatever. The recommendation that dealt with education tuition revenues being netted. We have an idea of what kind of dollars we're talking about there.
For me?
Anyone who knows the answer.
Yeah, I have an idea of how much we're getting. It's let me just run the exact numbers.
I believe this year was in the neighborhood of 900,000, right, Ashley?
Yeah, I agree. It's on one of our reports that we get. Hold on one second. I'm just pulling that one.
While Ashley's looking that up, I do want to point out, we spoke about that. I know she's had conversations with the superintendent, and I don't believe the board intends to change the approach. I know there's 2 schools of thought. One is this approach. And
Are these the excess cost grants?
this is the Hartford.
This is the
choice
Hartford reimbursement. Yeah.
excess, Hartford, City of Hartford students.
Okay, so those aren't going, I thought those went into your special revenue fund with the other.
They are this year, effective this year. I set up a special revenue fund.
This year being.
July 1st of 2000 or for fiscal year 22. So it started July 1st of 2021.
Okay, so those will go in along with your regular open choice tuition or grant money?
Yeah. So I'm just pulling up the report so I can give you the exact number. reports. Yeah.
I'd bring that up because I think, Joe, that's different than when we had that conference call earlier in the year.
Okay.
Yeah, so we had in one of our desk audits for the EFS report, the expenditure, the concern was, why did you reduce your expenditure? So it was the same concern that the auditors had. So for this fiscal year, we set up a new special revenue or a new account for the Hartford reimbursement. And I'm just trying to, I'm sorry, I'm looking at multiple screens and trying to get it big enough so I could see it. So what we do is we have it in that account, and I'm paying those tuition bills directly out of that account, much like I would do out of some of, like, you know, my Medicaid billing or anything like that, any kind of things. So it's not going into the general fund. We're not reducing the expenditure. We're not paying the initial tuition bill out of general fund and then reimbursing the expenditure line like we had in the past.
Yeah,
It's how-
previously, both the payment of the bill and the tuition went into your regular accounts,
That's
regular
correct.
special ed accounts.
Yes.
So now that will be out, and the budgets that you're preparing from now on have that taken out. The expense side.
So the budgets were those.
They were
those
always
pieces-
net before.
Correct. They were never in the budget. Yep.
Yeah. All right. But now we don't have to consider the revenue part of it.
Correct.
Because the expense will go straight to your choice fund.
It's not a choice. It's not
Well-
the choice fund. I can't find the exact number because we've changed the name, because we also have a similar situation with the revenue that we get from the CCTA. So we put the money in it, so we're not reducing the expenditure lines for any of this. So the certified and non-certified salaries for those positions that we split with Cromwell for that program, it's also going into that account. So we're not reducing our expenditure.
That's also new, right?
That is brand new this year as well. Yep, that
Okay.
started September of this year.
Ashley, is that the program with the Y for the kids who are beyond 18?
Yes, so that's for our
Okay.
transition program. Any student from 18 to 22, we're required to educate in our system, and this is part of their I don't want to call it adult learning, but it's their life skills course and things like that. It's the extended program for our adult learners.
I have to, agree that from the Board of Finance perspective too, I think it's easier when all of these things are treated broadly rather than netted. When they're netted, we don't always know the ins and outs of each transaction. So I think
Yeah.
just as a general rule of practice going forward, I think we would support you, having these things shown broadly
Yeah.
rather than separately
Yeah.
or netted. I'm sorry.
And we're, of course, always, if you ever require additional information for what goes into these reimbursements, certainly there's, based on confidentiality issues, we would have to just exclude certain information. But as far as the financials, we could certainly share that with you if you're interested on how we come up with these tuitions and how we bill for our services for our choice students. If you have any questions on that, I could certainly provide that information for you.
I think I just had one more comment, and it's more a comment than anything else to Tim and Sal. Kevin had pointed out to us about the fund balance being 18 million, in the financials. And in case anyone does question that to you, I think the best place to go would be to page 84 of the report. There's a footnote there that specifically identifies the fact that subsequent to year end that we appropriated $5.3 million for the pension fund. So it's just an easy way if someone, is asking you, how come our fund balance is 20% of the budget, which is a high number. A big chunk of it, according to the policy that we had set, came out right after year end.
And Ashley, I think that's important to note in any potential discussions in union negotiations.
Mm.
If any union were to grab our financials, because they're on the website, I know they all grab them everywhere, and try to look at kind of the wealth of the community. Our fund balance is not $18 million. It's more about $13 million now.
Right.
And actually a little less because of the fire vehicles that we purchased as well.
Right. We actually had our teachers negotiation in the fall. And when they pulled all that census data already, the data they had did show that Berlin did have the ability to pay. So we were able to settle that teacher's contract a little bit lower than the state average based on the data that they did have from the BEA and our attorneys as well. So, but yes, you're right. They look at whatever they can get.
Sal, do you have any questions, anything?
Oh, no, I mean, I guess on the prior year carryovers of items, I'm sure we have a lot on our plate, but is there any implementation plans on things that are carried over from the prior year, or is it, or some just not being, or some, like you just said earlier, we don't need to do it because we're doing something different? Just a general question, really,
Yeah, I would say the biggest, most of those that were originally put on a few years ago, we have worked through. The ones that remain, we have some system challenges. The golf course system challenge, the capital with the water and sewer and some of those. I think the town has to make a decision, probably more Berlin Water Control, to comply with that recommendation would really require hiring a firm to do a complete inventory. We have things that are summarized. For example, fire hydrants are general versus
Sure.
being able to go through. So it's not something that we can easily do. If it's something that we believe is worth expending the money to do that whole inventory, we could update some of the summarized items with the detail. And that would allow us for deductions down the line at a more detailed level. Gail, I don't know if you want to add anything on that.
No, you summed it up pretty well.
So
Thank you.
they're not lost. We are working through them.
And as far as the Board of Ed side, we have been working to try, last year, the new vendor process, we did address that. So the new vendors aren't just being put in the way they had been in the past. The way it works now is when somebody requests a new vendor, it comes through my desk. I do the vetting of the vendor. I verify that they are legitimate. And for the most part, I'm the one actually entering it into the systems. There are some times where things are a little crazy down here and data entry really just isn't something that I should be doing, where I throw it off to Doreen or Wendy. But if next year it's going to be, we got to cut that off and I have to task it with somebody else, then that's certainly an easy fix for that. But I don't want you to think that we are not properly vetting our new vendors. Another thing you need to, we should be considering when it comes to a new vendor on a Board of Ed side is when we have field trips that get canceled and we have all these parents who wrote checks out to the schools, and now we have to reimburse through the activity fund, every single one of those parents becomes a new vendor. So this process can be very, very time consuming. So that's something we're also trying to kind of be aware of through some of the other systems that we have. As far as the cafeteria accounting, I spoke with Kevin today on how he's doing his prepaid. So I'm going to have my accounts payable, the person who does the cafeteria accounting, work with somebody upstairs as far as how to do it on our side, just to go through the step-by-step process. Additionally, we use a system called NutriKids, and that's where parents fund their cafeteria accounts for their children. And there are some limitations to the type of reports that we can get out of that system. So I contacted my data specialist today. We're going to start working with their implementation team, see if we could build some certain reports. And if we have to bump up that software package to include this type of reporting, then we can certainly do that. And And I want to say we tried our best to get rid of whatever we could, or I certainly did. I know I took on this position mid-year and I tried to do as much as I could, and we're still looking to move forward as best we can. So
Great. Thank
I
you.
don't want you to think that we're
No, I'm not. I'm
we're
just
ignoring. I
letting-
know, I know.
No, thank you.
Yep.
Is the advanced collection problem, is that anything software related or just the policy that we've had?
Well, from a software standpoint, we submit the information and we distribute, print the bills and update our system at the end of June. So prior to that, in order for us to take collections before that, we would have to maintain an offline record. There was a period of time a few years ago where they would take the checks in, keep them in the safe, and actually maintain an Excel spreadsheet. We did not believe that that was an appropriate way to handle it. And so we have the practice. The last 2 years, we have had banks who have given us, as you can imagine, there are a lot of people who escrow. And so we've had $1 million plus received from the bank in June. We recorded that as unearned revenue. And then beginning in July, that file is brought in and processed. As far as until we actually load the checks into the system, we wouldn't be able to enter them into QDS, which is our system we use. And so from a tax collection standpoint, the feeling is that until we have the bill in someone's hand, collecting the taxes would not be ideal. The last 2 years, it's actually not been a huge issue here because the mill rate's been flat. So if you didn't do anything to raise your assessment, your tax bill was the same. But many years, your mill rate will change. And for many, many people, that calculation just is not easy. And so we'd end up with a lot of erroneous billing. You end up potentially with refunds. You end up with some issues.
Well, if you don't send the bills out till close to July 1st, you don't have the issue to start with.
Exactly.
Because they don't know what the bill
And that's why
is.
we don't accept the early payment. Some people will come in and say, I'd like to give you the money.
Yeah.
And we say, well, you don't have a bill in your hand. You can, some will come in and try to pay us with last year's bill and say, we'll give you this. And we're like, what are we going to do with that?
Yeah, I have to say, and Joe probably would say the same thing, that I don't know of anybody else of all the clients that I ever had that wouldn't take an advance payment. I don't know, you have any others?
I have a couple small, but this recommendation, I guess I've done, say like town of Chester didn't for a while, now they do. But all my larger communities, like East Haven, even East Haven gets $4 million in advance collections. And you go to Fairfield County, it's more like 8 or 10 million. So it just seems kind of, and again, the recommendation is written that once you're live, once your bills are printed, I mean, ideally, you'd never turn it anyway. That's, if someone's willing to pay you, best practice is you take the money. But once the system is live, consistently across other clients, we're talking millions of dollars in collections before June 30.
And once the data is loaded, the checks are loaded and QDS is updated, then they will accept them. That just happens very late in June.
Right, but you still have zero recorded, so it has to be somebody that's paying, is willing to pay. And when I asked you, you said our policy is not to accept. It's just not consistent with the best practice and what I see with all my other clients.
Okay. May I ask you guys a question about something that we would like to change and just kind of get the thoughts on this before we go to budget season? In the general fund budget, the town has revenue that it collects and expenditures that it recognizes for extra duty police work. So police officer is working traffic at a Connecticut Natural Gas spot. They're doing work on the road and they're doing traffic. We then bill Connecticut Natural Gas and collect the revenue. We recognize this as extra duty revenue. We recognize the expenditure and we charge at an overtime rate for top tier sergeant. That's what we charge vendors for. Well, it's not always top tier sergeant and it's not always, that rate that we're being charged. So there is a difference. Then we also charge a fee for the use of the police car, which is normal practice for most towns. I would like to propose moving all of that activity out of the general fund and into a special revenue fund, which would allow us to capture that differential with the intent of taking the excess transferring it into the capital non-recurring for the use of police cruisers. We struggle every year for ways to fund capital and specifically police cruisers, and they come back each year. This wouldn't buy, you're not going to buy 2 or 3 cars. But if we were to handle this, it would mean we wouldn't budget because we're really using the last 3 years average. It means nothing. Last year we budgeted 300,000 and we had 600,000 of revenue. There's a large number of projects. There is an expenditure that would come out as well. So basically we would stop budgeting the unknown amount. We'd pull both out of the general fund and it would give you, albeit a modest, but still some repeatable, reliable revenue source to help in the purchase of police vehicles into the future.
Do we charge an administrative fee? I think statute allows us to do that. Right?
We charge a 12.5% premium on top, which is designed to cover the car, the administration, and that type of thing.
I'm okay with it, Kevin. I'm fine with it.
That's just a little difference in how they present the budget to us this year.
We would take that
Well,
out of the budget.
No, we would need to establish a new fund.
We'd establish a new special revenue fund. We wouldn't even budget for it. We would just, as the money comes in, we would recognize the receivable. And then when the money comes in, the receivable would clear in the special revenue fund. And as actual cash reaches a level, and we could discuss what that level is once we realize it, money could be transferred. So we would never transfer the receivable. It would only be cash collections once received. That fund balance exceeds a certain level, we could then transfer it for the purchase of vehicles. It's kind of similar to what we were talking about with the Hartford Choice, that you're putting the revenues and expenditures in a special revenue fund and keeping it out of the general fund.
The impact, if we looked at last year's budget, is special duty revenue and expense balance.
No,
No.
it's actually, it's more revenue, it's favorable.
So it's a hit to the general fund.
Now, what we would leave behind, the intent would be to leave behind a budgeted amount for the cost of expected extra duty work that the town council agrees to waive. Most notably Berlin Fair. We would leave that in the general fund as an expenditure for the taxpayers. But the actual private duty that is done where it is billed and not waived by the council would go into this special revenue fund.
So that'd be a
Kevin,
double difference as well.
How would you treat the extra duty for town departments?
That would be still run through the town budget. So if it's for highway department, highway has the cost for that. And so it should be, payroll would be billed against that. So it would stay within the general fund. What it's basically saying is there would be a budget established for the council to determine waiving. Now they could go beyond that. It's not like the council's restricted from it, but it says that if the council waives the charge, they're really saying we agree to put the police officers out and we agree to pay them. The police officers are still going to get paid. And so therefore the taxpayers would pay that bill rather than subsidizing it with other extra duty revenue. But in exchange for that, all of the extra duty revenue and the excess amount would be available for the police cruisers.
Any idea how much the waived fees are per year? Estimate?
It varies, but I can tell you Berlin Fair is about 28 to 30,000. Well, I mean, you're talking the entire weekend, you're talking overtime, and it's several police officers. It's not all of what they do. There's
Yeah.
traffic versus
Yeah.
other work. So
So Sal and Tim, one of the things we'd be faced with coming right up would be a hit to the general fund because of the first step, taking the revenue and the expenditure out, and the second step, adding more expenses in.
but you leave the expenses, what it would be. You leave the expense. There's no revenue today.
Okay.
So we record the expenditure. We expect
The
that.
expenditure is already in. Okay, so
We-
there'll be one number coming out.
Yep.
Which will be a net revenue decrease to the general fund.
The way we budget is we expect expenditures to be based on historical patterns, plus some growth if we're seeing more activity. We add 12.5% to get to the revenue, and then we subtract projected Berlin Fair costs. So you would leave that Berlin Fair cost in there, and then the others would all come out of the budget. I guess, I mean, one of the things I wanted to bring it up is to make sure you're okay with that, Joe. We don't want to go forward with that and then have you look at this, say, what did you guys just do?
The towns do it both ways, so it's pretty common to have a fund. It might be like 50-50, but it's done both ways. So that's a management or board decision as far as how they want to do it.
And we don't have to, certainly don't have to decide today. I just wanted to make sure that the audit committee, our auditors are good with this before we have more discussions. And this is something that can be discussed within the context of the budget. Right now, we have it in the draft budget, and the proposal would be to potentially take it out, and we can leave it in, and then you guys can move to take it out when you meet so that we handle it that way. But it does give, it's reliable. I can't tell you what the estimated amount is. There are years it's been 250 to 300,000. There's years it's been 600,000. I would expect over the next few years in Berlin, the number's probably going to be on the higher end than the lower end because there's so much activity. But it would give some sort of reliable flow, even if it's one car a year, one car every 2 years. It's something that relieves a little future taxpayer burden of purchasing the capital.
I think the idea has, a very sound fundamental purpose to it. Before we see the budget this year, not knowing where it's going to go, not knowing how much that hit would be, I don't think I would say until we see the numbers.
Oh, right.
That was my biggest concern. I mean, we don't know what the number is, so it's kind of hard to make a decision on it now.
Yep. I just wanted to make sure
In
conceptually.
principle, it sounds like a great idea. So piggy bank for police cars.
Yeah.
So.
Okay, that was it. Sorry to monopolize so much time.
No, that's-
I have that information as far as the choice, or I shouldn't call it choice, I'm sorry. It's the Hartford reimbursement money. This year, we're only anticipating about 583,000. We did have some students age out. We had some students drop out. So we no longer have to, or Harvard, we don't have to pay their tuition, obviously, because the student is not going. I did get a memo from PPS today saying that they may have to edit that, but that basically goes based on the number of students who are attending, how many days, if they have to add to that program or not. And we record that in account 502 now. So it's no longer in general fund.
So that wasn't necessarily excess cost grant reimbursement type.
No.
It could be any special ed cost.
It's so for this account, it is the Hartford Choice students who do not attend who are a Berlin student based on the choice program, but are outplaced to special education facilities.
Okay.
So
Okay.
essentially, and this is something that I think everybody kind of goes back and forth with. Berlin is the middleman, as many other districts who are in the same situation. We would prefer to have these outplaced people, outplaced facilities, just bill Hartford directly and keep us out of it. Unfortunately, something changed many years ago, and we front the cash and ask Hartford, we beg Hartford, we beg them. And I hold off on bills as much as I can. I get calls from angry business managers looking for their money, and then I call up Hartford, and we do it. We can whatever we can do to kind of not.
They've never stiffed you though, right?
So no, not to my knowledge. There was 1 year where they paid us after June 30th,
Yeah.
which was a big nightmare for us. But I'm really kind of a stickler with it, and they get past due invoices monthly. I kind of bill them right when they get their excess cost reimbursement because they're a little flush. So I found when they do that, we do get the cash at a reasonable amount of time. So hopefully that method still works, but I know Hartford is kind of struggling as well, and it is what it is. As much as I hate that statement, it is what it is.
Does anybody have any other questions, comments? Roche, anything for Joe? You're good? Okay. Tim, do you have anything?
I have a quick question on that program that she was just talking about. Now, to get it straight in my head,
Yeah.
we take students from the Hartford school system and bring them here.
Mhm.
And then they're outplaced from here to special ed classes. And then we have to pay for the special ed class and then try and get Hartford to pay us back for their student that they sent us.
That's how it works. Yes. Yep.
Oh, okay. That sounds like something Connecticut would do. Okay, that makes
Yeah.
sense. Well, it doesn't
Yeah.
make sense, but
Right, right.
It only makes sense as long as we get paid in the end.
Yes,
Right.
it's, we shouldn't be begging for money.
No,
I mean, I agree, and I feel like the previous business managers would be the same, had the same kind of mindset. Like I feel like, why can't you guys just bill Hartford directly and keep us out of it? And I don't know, it must be just a way of a discount for
I
Hartford.
think you're,
you know?
I
don't
think
know.
you're right. I think a couple of years ago when they did it, it was some change in the law and it
Yeah, it
has
was
to do with,
legislation.
you know, where the kids are considered, you know, what's their home district and who's responsible, you know, in terms of district reporting, because otherwise it would be too simple, Tim, you know?
Yeah, I'm just baffled at, I'm learning so much about why things don't work in Connecticut.
Gail, do you have anything? Any questions, comments, anything? Okay. Joe, anything else? Any concerns, anything else you want to share?
No, that ARPA thing was my only news.
Okay.
Yeah, you know, I did take time, you know, with the boring interest that I have now that I am fully retired. You know, I did take some time to go through the report. I think Kevin and Gail did a great job on the report. Joe, I think I never doubt the quality of your work. You know, your firm's always been a good firm. You know, so, I mean, from my perspective, I have no other issues or anything with it.
Well, thank you, everybody, for your time. And I guess we're good. Everybody have a good rest of the day.
All right, take care.
Thank you.
Bye-bye.
Thanks. Bye.
Bye-bye.
I